Hey guys, it's Charlie G. Today I'm going to tell you 10 deductions that you can do for your home. As a homeowner, it's very important that we make all these deductions because our home is a ever-ending investment. We're continually fixing things and trying to make it better, and things are breaking. There are tax advantages to owning a home, and you have to make those deductions every single year. The first and probably the know-it-all is the mortgage interest, because that is probably the biggest expense that you're going to make on the home is the mortgage interest. Over the course of 30 years, you could end up paying $200,000. It's just a lot of money. So definitely the mortgage interest, never forget to deduct that. The mortgage company should send you this form at the end of the year, and you make sure that you give that to your accountant, and he will do his magic to make sure that that gets deducted. The property tax is another thing. It's annoying. You usually have to pay it every quarter, sometimes monthly. It's a good thing to know that you can always deduct that. There are limitations. It's definitely important that you check with your accountant, because before you can deduct the entire property tax, especially if you're in an area where you're paying $20,000 or even $30,000 of property taxes. That's enormous. And the government telling you that you can only deduct $10,000. That's, come on. You know, the money is being used to fund education, local streets. It's taxpayer dollars. I should be able to deduct that, because technically when you're paying taxes, you're helping the environment, society be more balanced and organized. It's towards good things. Your mortgage insurance. So if you had put less than 20% down on your home, you can actually deduct your mortgage insurance, and it can vary as well. I would definitely check in with your accountant, especially the year that you're filing, to ensure that the regulations haven't changed. Because I remember prior to the year that I purchased my home, you couldn't do it. But then the first year that I owned the home, they allowed you to deduct that mortgage interest. So I was like, yes, this was awesome. Homeowners insurance, and this can vary as well depending on if you're renting. I believe if you're not renting, then you can't deduct it. If you are, you can, or at least part of it. Definitely checking with an accountant, but I know it is something that if you own a home that you're renting part of it, you can deduct that homeowner's insurance. Now the advantage is if you are renting, you can deduct the utilities, so that's the electricity, gas, and internet, as long as it's being used, shared across the different units that you're sharing, then it's definitely something that you can deduct. And you won't be able to deduct the entire portion unless it's a completely rental property. But if it's being shared with as your living space and someone else, or more than one person, more than one family is actually living there, then you can deduct a certain portion of it. The way that works is, let's say I have a 3-family, I live in one and I'm renting the other 2, then a third of that I cannot deduct, but 2/3 of it I can. If it's a 2-family and I'm living in one and I'm renting out the other, then I get a 50% deduction on whatever the expenses were. The inspection fees, yes. As long as you have receipts, you can definitely deduct the inspections fees. Whether that is the inspections that you did trying to obtain the home, or inspections that you did to make certain repairs. All these things are things that you should definitely save and document, because you can actually deduct that. It's part of your repair and maintenance deductions, or cleaning and maintenance that you have to do for the home. Supplies that you buy to maintain and repair the home. So that can be appliances, electronic pieces of wood, a drill, any of these things are things that you can deduct. If you're a single person living in a single family home, it can get tricky. Not all of these are actually applicable, but if you are renting and these things are being shared across, yes, you can deduct these expenses, because technically those are investments that you are making for the portions of the home that you're renting to make money. Because the IRS tax you on the profit, you can also claim your losses against that. So anything that you buy from Home Depot, Lowe's, most of the time you can deduct, because I'm assuming that you're using it to repair and maintain your home. And I believe the way that it works with appliances and things that you're buying for the home, if you're making under $150,000 and you're making these repairs and expenses, you can claim these losses against these appliances and things that you're purchasing for the home during the following taxes. However, if you're making more than that, you can only claim it once you sell the home. There's all these different stipulations, but these are facts that accountants know because they can change from year to year. Definitely check with an accountant. These limits are being lifted, sometimes decreased from year to year. So the accountant should know all these stipulations and all these laws that are put in place. What I'm telling you, these is definitely for pure informational and educational purposes, so you can bring them up to the accountant and they can tell you whether you can deduct it or not deduct it. Service rendering, so that's your attorneys, your general contractors, your exterminators. Yes, you can deduct those because it is part of you maintaining a home and technically repairing it. So that goes under your either your cleaning and maintenance or your repair and maintenance part of your deductions. If you are using part of the home as your office, I know during the pandemic a lot of people were working from home, so technically you were forced to use part of your home as the office. You can actually deduct part of your home for such manners and reason because we were forced to do that. We had no choice. People that are permanently working from home, they can do that as well. So talk to your accountant because there's a whole mathematical portion that goes into how much of the home is being used as the office, how much of it you're renting, all these things that goes into play. So definitely look into that, talk to the accountant and see what those maths can be because it can vary. It can be 25%, it could be 30%, it could even be half. For everyone, that is a different number. Talking to an accountant, they will definitely help you figure out what that math is. The last thing is medical equipment that is needed for the home. So let's say you are immobile and you're on a wheelchair and you have to install certain, like the rails that you need to get up the stairs, or you have to make your bathroom a certain way. All these expenses are completely tax deductible to help the health of everyone that's living there to be much better. So medications that you have to buy to help you sustain the property for yourself or for the people that are living there, or all things that are tax deductible. Again, for the full qualified list, I do not know what those are, but these are things, anything that is medically related, you should definitely speak to your accountant to see if you can deduct that. These deductions are not clean cut. Always speak to an accountant as these can vary from year to year. There are new things that the IRS would add or even take away. Definitely speak to the accountant and see what those are. But any expense that you have, ensure that you're saving your receipts and you're tallying them up, and speak to an accountant to figure out exactly which category should you put this in. What I do is I set up a spreadsheet for myself, and as the years go by, he'll tell me, no, this goes here, this should go here. And I've gotten much better at it to the point where he doesn't even have to go through my list of itemized items, but instead he'll go through the categories and he's just putting them into his accounting software. So I'm saving him a tons of workload of doing all of that, and he's just pretty much going through what he thinks I can't deduct this year, what should be a long-term deductions, all these different rules and tricks that I don't know about that he's more familiar with. I'm just recording the numbers. Keep in mind that your deductions have to exceed a certain amount. I don't know what those are from state to state, but I believe sometimes it's over 12,000. If you have 12,000 worth of deductions, then yes, you should do it. If you don't have as much, then you shouldn't do it, or you can't do it. There's so many rules around that. I can definitely email you a template of a spreadsheet that I use for myself, which has benefited me so much because it helped me categorize everything. And when I present that to the accountant, he's just looking at it and punching in those numbers. I can definitely email you that. Just reach out to me below. You can drop a comment below. Let me know if you're interested, or just send me a message across online. My email is made public, so look, I will drop my email in the description below. You can just reach out. For myself, I also have a simple app that I created where it's only linked to me. I just log in and I pretty much take pictures of my receipts, enter the information, select the categories, and then at the end of the year, all I'm doing is copying and pasting this big query of all the receipts that I've entered across the spreadsheets, and it just populates everything for me so easily, and I just give that to the accountant. I'm hoping that I can build this into a publicly made app that is free to use. If you are interested in this, also email me as well so that I can keep you as part of the list. When that does become available, I can let you know. Please subscribe if you haven't done so already. If you have any questions or comments, just let me know below. And I'm hoping to continue making these videos as educational, informative as possible. Definitely let me know your thoughts. I'm looking forward to seeing you next time.